This week's trades, market movers, and technical levels that count, wrapped up with clarity and precision. This is Weekly Wrap Up with Verified Investing.
Hey everybody, welcome to the Weekly Wrap Up here at Verified Investing. My name is Gareth Soloway, Chief Market Strategist here. All right, so we're ending the week on a good note. We saw selling early in the week, and then Micron saved the day. Earlier this week, I discussed how that was going to be an epic earnings report and so meaningful for the overall market. And it was going to be the hinging factor. Would we get a Santa Claus rally into the end of the year? The answer is yes, we most likely will. And now it has started. And again, the reason why it was so important is because Oracle collapsed on earnings, right? Then you had Broadcom, another chip stock, basically had good earnings. The stock still collapsed on margin worries. And so everyone in the AI trade was starting to freak out. Micron delivered and calmed nerves, and that enabled us to see the market rally both yesterday and today. In addition, volume is getting very light. Remember, the big institutional money, they're already going on vacation, and they'll be away for the next 2 weeks. When the cat's away, the mice will play, aka retail investors, and therefore you get a neutral to upside bias. Now, there are some caveats here. We are still waiting on the Supreme Court decision on the back of what's going to happen with tariffs. Are they legal, illegal? Do we have to return all this money? Do we not? That could be a hiccup that could pop up into year end. And also Venezuela. You just never know. And remember, the Trump administration, more than any other administration, is very smart when it comes to marketing and news release. And they'll try to release things on days where it's either a weekend, so it has the least amount of impact on the markets, or they'll do it on like Christmas Eve when no one's paying attention, right? And that's something to keep in mind as well. So there is a small risk that we get these news stories or some factor to break. But aside from that, neutral to upside. And the charts confirm that, right? We've talked about the charts here. Now, once we get into January, it's a whole new ball game. We'll discuss that in a second. Let's go to the S&P 500 intraday. This is the 10-minute chart. And what we can see is this is exactly what you would expect. The Friday before the week of Christmas, followed by the week of New Year's, and we get the initial move up, and then look at how the markets just do nothing into the end of the day. So unbelievably quiet here on the overall market today. Now, if we flip to the weekly chart, this is where things get interesting. So we know our big parallel has predicted every high and every low, right? So again, this high of the bull run in 2021 marks the high end of the parallel. Then you have the low end with the COVID low, the 2022 bear market, and the liberation tariff sell-off low. Here, we hit the high end. So we have to assume, again, that this is a major high in the market. Now, just because of that, it doesn't mean into year end, we can't gently float back up and kind of get back to that line before January sees rejection. Now, again, it's only about 2.3% upside. So again, the question is, can we get that next week and the following week? Granted, they're each 4-day trading weeks with a half day in addition. So it is going to be a shorter trading week. But if the volume is light enough, it could do just that. Either way, if you look at risk reward, where are you positioning, right? Are you looking for, oh, yeah, I can get about a 2.2, 2.3% gain out of the market to the upside? Or we got to act more defensively because we could have much more downside to the low end of the parallel. So again, you really have a 2.3% upside versus 20% downside if the bottom were to fall out of this market. Now, granted, it doesn't go straight down. We'd have a major support at the highs from 2025, January. But still, ultimately, that's what this chart shows, right? Here we were at the high end, and we eventually came down to the low end. Low end, and then we got almost there, came back in, and then high end there as well. Okay, so keep that in mind, what we're looking at. And again, I'm kind of, just understand what I'm giving you guys. I'm giving you guys my near-term projection, which is neutral to upside. Notice I'm not really super bullish because it's hard to be bullish when there's limited like 2.3% upside, but neutral to float, gentle float, holiday cheer, all that stuff into year end. And then once we get into January, and it doesn't have to be the first day of January, by the way, probably won't be because that's a Friday before a weekend. So it's just the extension of the holiday week, right? But ultimately, once we get into kind of that first half of January, that's where I would expect a resumption of the downside based on technicals. And that also goes with the QQQ here, right? So the Qs are getting a bounce today. This is the daily chart of the NASDAQ 100. And just like the S&P, could we rally up to this trend line? Yeah, we could. That's about a 3.5% move, which makes sense because the NASDAQ usually rallies more, right? Percentage-wise, it goes up more, and when markets fall, it goes down more. But then the same thing applies. We have to assume this, which was resistance here, but support here, here, and all the way back here. Again, this is now resistance, and it should reject price according to technical analysis. At least that's what probabilities favor on the charts. And remember, technical analysis is nothing more than probabilities. If you read the charts correctly, you put essentially you put yourself in a position where a majority of the time you will be right. Not all the time, a majority of the time. Okay. Let's go back to some charts here. Some big events here I think we've got to talk about. This is the Japanese 10-year yield. The Bank of Japan hiked interest rates to a 30-year high. Granted, it's still well below the 10-year on the U.S. 10-year, right? But nonetheless, big move above 2%. This is something we have to start to monitor. I don't think it's important into year end, but I do think once institutional money comes back, it becomes very important to the markets. Again, it's a yen carry unwind trade, potentially a few $1 trillion unwinding in that scenario, which could tighten liquidity. Granted, the Fed is now doing a pseudo type of quantitative easing by buying short-term bonds, but nonetheless, it still would be a tightening of liquidity from that aspect. And then just the fact that a rising tide lifts all boats, right? If you have a country that has a high debt to GDP ratio, interest rates are going up. In general, the U.S., which also has a high debt to GDP ratio, it makes sense that it would lift the 10-year as well, which would go counter to what the Fed is trying to do by lowering rates. And we can see that on the 10-year. The 10-year today with the Japanese 10-year going up, the U.S. 10-year is up, but it has not broken out yet above 4.2%. All right, couple other stocks. One of my favorite bearish bets going into 2026 is Carvana. Why? Because they got added to the S&P 500. Nothing fundamentally changed with the company. It's now, as of today's close, added. And so it got this big pop going into that. And now usually you see analysts and institutional money say, wait a minute, what's the real value here? And this should come all the way down here, which will be supported at 400. So that's a nice drop, about a $60, $70 drop. But then we should continue even lower. In addition, I just read yesterday that CarMax, another used car, now listen, they don't have the whole vending machine thing that Carvana does, but CarMax is lowering its used car prices. That's going to put margin pressure on Carvana. So again, in the first half of 2026, one of my favorite short plays is Carvana. All right, keep that in mind. CVNA is the symbol on that. Next up, Oracle. Oracle was one of my favorite long plays going into the last couple days. Why? Because it filled a major gap. We had this with Smart Money Stocks members and great pop there. The stock is up 7, almost 8% today. Look at how small of a bounce 8% is too. Fell 50% into gap fill. Boom, it should each actually continue up into year end as well. I do think that even in January, this should bounce back. I would think that this gap gets filled around 222 before it sees any sort of trouble or major downside. All right, other things to go over here, folks. We also saw NVIDIA today getting a nice bid. NVIDIA, again, popping up as we enter the last portion of the day today. So again, a little bit of a bounce there. It's end of year, so I'm not surprised. Again, there'll be some window dressing, all of that kind of nonsense. But ultimately, to me, NVIDIA is still going lower. I have a first half price target of $150 on NVIDIA. And again, that would be from here, another $30 downside move. Other than that, guys, again, Meta today, you could see getting a little float way off its all-time highs, but floating up. We have Microsoft, same sort of deal. Actually, Microsoft slightly negative today now. And again, struggling. If this breaks, this 468 level breaks on Microsoft, watch out below. Again, you could even see next year a target price of $395. Notice how I'm using charts, and the charts are not the greatest in terms of their prediction, in terms of telling us that stocks will go up, versus every other analyst is like, oh, raise the S&P price target next year to 8,000 to 10,000. Charts are not telling us that. Again, I state, the charts are telling us prices are going lower, at least for a good portion of 2026 on stocks. So just be aware of that, is that that's going counter to what these analysts are saying, which usually they're fair weather friends, right? They like to go, if the market's up, they're going to raise. If the market's down, they're going to cut. It's just the way it is. All right, let's go to Bitcoin. Bitcoin today getting a bounce. The bear flag tried to break yesterday, got just a little bit below, and then saved today, never confirmed downside. So remember that in general means that price can continue to trade inside of here, maybe even getting as high as close to 100,000. But if we ever break and confirm below this level, that's where that next leg of downside comes in. So watch that closely. Gold today, nothing going on here. Again, why isn't gold breaking out? With the CPI data, meaning the Fed can cut rates. All the mechanics are here for gold to break, and it's still a bullish chart, but it is a little concerning that we're not seeing a bigger move to the upside on gold. Silver, on the other hand, is making a new all-time high. I gave you guys my target earlier this week of $68 to $69 per ounce. Maybe as early as Monday we get there. We're getting pretty darn close. We're basically within a buck, $1 to $2 of that target range. Natural gas, we'll look at oil in just a second. Nat gas flushed early, coming back up. It is still holding technical support. So again, it is oversold, but there is still a chance it could fill this gap before a bigger bounce comes in. And then crude oil here, we have this longer term trend line down here. That's where we went to this week. And now we're seeing a little bit of momentum. And I actually think, guys, listen, I actually think the economy is going to somewhat weaken, although not massively in 2026. Because of AI tech spend and stuff, but I do think we could enter a small recession. But overall, I still think oil could be the missing link in terms of upside. It could be the trade of 2026. And the reason I say that is if you look at oil in terms of inflation adjustment or inflation adjusted oil, it is so low. Considering all the inflation we've had, oil is trading at levels it traded years ago at, right? Then you throw into the fact oil compared to the price of gold, oil compared to the price of silver, platinum, palladium, almost all the other commodities, it is insanely low historically. And so there could be a catch-up trade here in oil. Again, it's a little bit hard because part of me wants to say, oh, but a recession. Oh, there's so much oil out there. But then the chart is kind of like, wait a minute. And those other metrics are making me think data points. Wait, the data points are telling me something else. And so we just have to be aware of that. And I will be keeping an eye on this. Right now, I do have a long on oil as long as it holds here. And even if it gets down to $50 a barrel, I do think there's something here, but I will keep you guys in the loop on the crude oil trade. All right, you guys have a great weekend. I will be back next week. Of course, even on the holiday weeks, we'll still be doing our shows here at Verified Investing. Remember, all charts and data, no BS. That's what we're here to do. Give you guys a shining light in an otherwise ridiculous world of narratives and hype. Have a good one, guys. Take care.